Well, I think our view was that very early on was that we'd probably get to the kind of 50-day moving averages. What surprised us, I think, has been the NASDAQ 100 or the NASDAQ has really bounced right through those moving averages, obviously led by companies like Amazon and Microsoft as well. So those have been the leaders actually going into these falls, and actually the leaders out as well. So I think that's probably surprised a lot of people at how severe the bounce has been. And I think now there's been, certainly over the last few days or so, there's a sense of, a bit of catch up coming in, driven by, don't fight the Fed.
The trouble is, you ask yourself what the fundamental principles are for this bounce to be maintained, given that you have analysts like Bruce Kassman coming out at JP Morgan and saying that we see a 70% peak to trough decline in profits for full year 2020. That doesn't sound like it matches up with the kind of rebound resilience that we've seen at this stage. And the technicals also, as we follow some of those patterns we saw in 29 and 87 and so on, they do suggest that maybe we are primed for a bigger leg down at some stage.
No, absolutely. I think the fears of a second wave are certainly there. I think digestion of the earnings numbers and economic numbers as we come through this are going to be there. But I think that the key thing, and I think many people are forgetting this, is that as we were coming into this year, there was a lot of confidence around the trade talks, a little positivity coming through. Remember, economic growth, particularly in Europe, had been quite weak over the last few years. So we were, starting to see, and certainly we were expecting, much stronger economic development coming into this year. But I think obviously we've kind of forgotten that. We've gone straight down dealing with COVID-19. I think that there's been a lot of pent-up demand, particularly on the manufacturing side, that has been, under scrutiny, certainly over the last 2 or 3 years, driven by trade talks. And possibly that's where we'll start to see the recovery. Clearly, this is a recession driven by services as social distancing measures really kick in. But we've had manufacturing probably will be the first one out.
I want to ask you a little bit more about that, Moz, because there is a feeling that, that pent-up demand story is there once we get back to normal. But what we've seen with Next yesterday, it started some of those online orders again at 7 a.m. By about an hour later, had to close the website because it couldn't take any more. It does tell you a story about capabilities at this stage. Would you be chasing names because of that pent-up demand story, or does it make sense to be invested in the new economies? I mean, HelloFresh, Ocado, 2 other stocks that investors are chasing to highs this morning. But those are trends that may stay with us for longer, where a number of shoppers don't want to go back into stores anymore.
No, absolutely. I think the COVID-19 crisis is what I call an accelerator to trends that are already in place. So, companies like Amazon, Ocado, etc., were already, in the right zone of retail behavior. And I think all we've seen with COVID-19 is just accelerated it. So, Next coming on with online sales, one could argue that, probably a little bit behind relative to some of those other companies that have very strong digital franchises. So essentially what you're seeing, certainly at this phase, is that investors are going back to companies that were already in the ascendancy coming into this crisis. And they will always be the first ones out. I think then we hit this phase possibly over the summer where people start to get back to work. A lot of that positivity, I think, is priced into markets. So I think we're in for more of a choppy period over the next couple of months as we start to see people coming back to work.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.